This video is for educational purposes only and should not be considered financial advice. Strategy for 1000% gain on options trades. Outline. Intro, strategy components, example, recap. Intro. In this video, we will show you how we made a 1000% gain on an options trade last week using a simple non-directional strategy. Strategy components. The components of the strategy are earnings or news, the spread, the volatility, the average daily range, the strike price, days till expiration, and trade execution. Earnings. The first step is to scan the earnings announcements for the coming week. You can use earningswhispers.com to find them. Next, look for stocks whose options have a low spread no more than $15 wide. Volatility. Then check the VIX to see what is the potential move in volatility. If the VIX is at 15, the move will be normal. If it is above that, say in the 20 range, then price can move 2 times the expected move. The VIX is the volatility index. ADR, average daily range. Check the daily range of the asset to see how far it moves on a big candle day. This is the most you can expect from the move. You can use indicators to see what the average daily range is, or you can use the average true range, or ATR. But a simple and dirty method is to check for the largest candles and just measure them, and that's your expected move on an earnings announcement. Strike price. Write down the price levels that measure the farthest price can move in either direction. Days till expiration, or DTE. Go to the options chain and select the options that are at least 14 days till expiration. This is important because we're going to buy the option, and there needs to be enough time value available for the trade to play out. Sometimes it takes a little longer for the move to get to the price level, and if you choose an option less than 14 days, time decay will destroy the value of your option. We are in effect creating a strangle that is a debit. Many traders will tell you to sell options to create a strangle, but we are doing the opposite. Selling options limits your potential profit, and if volatility is high, you can miss out on some big moves. Our example. Here's the trade we took. There was an earnings announcement on Thursday last week after the market close for Intel. We checked the spread and saw that the spread was only $2 wide. The volatility index was up to 19 on Thursday, meaning that the move was greater than expected. The largest daily price move was 3.75, which was a gap down during earnings in the beginning of the year. We measured out the potential price move of 2 times the largest daily price move in either direction, and got a price target of 38 to the upside and 22 to the downside. We then went to 16 days to expiration. Here is where we executed the trade. We looked at the options chain and we bought a 37 call and a 24 put. Here is what the chart looked like. This is our measurement in January of 3.75. We noted that the VIX is at 19, so you double this potential price move, which gave us 7.50. So price could either move up 7.50 points or down 7.50 points. We bought the 37 call and the 24 put because the 22 put was worthless. We placed this trade after 12 noon when the price of the option was even lower due to time decay. Our total outlay was $22. After the earnings announcement, Intel opened up the next day at 21.94, smashing through our price target. The call option was of course worthless, but the put option was worth $225. We held on to it for a little longer and sold it for $261, which is a 1,186% gain from the $22 we spent for the trade. Additional thoughts. It is important to note that not all trades will be this successful. However, if you keep your costs low, you can make some big wins over time. It is also important to not be directional during earnings announcements. Many trading strategies fail during these moments, and you can start to lose faith in your trading strategy, even when it's not warranted. The same strategy can be applied to other big news events like FOMC and NFP. To recap, earnings season can be a very lucrative time to trade options, and the added energy of volatility can increase your profit tremendously. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.